is being recorded for quality control. Do you consent to move forward?
Yes.
Okay, great. We need this for compliance, and that's okay, right?
That's fine.
Okay, great. Thank you. So Tara, I'm a state licensed financial insurance, I'm a state licensed insurance broker. I work with, or what did I say? I work with 40 different insurance companies, and they all offer various types of mortgage protection programs. So my job is just to find the one that, figure out, number one, if you need mortgage protection, and then find the one that's going to make sense for you. We'll be looking at your family situation and your budget, and then tailoring a custom policy that's going to, suit your family's needs.
Mm-hmm.
So my purpose is to help you apply for that coverage and work with underwriters so we can get that approved and get your family protected as soon as possible. Okay, this says that the call is being recorded twice. So
yeah, I saw that.
It looks like those slides are kind of like interchangeable, like you can use either one you want to, or one or both of them, I don't know. So what mortgage protection does is it protects your assets and your family if you live too long, die too soon, or get sick along the way. So that means we have permanent options, we have term options, and we're just gonna find the one that's gonna make sense for you. Most of all, we want this to fit in your budget, so because it is a long-term commitment, we don't wanna take food off the table or anything like that. So, I'm not on my A game today, just so FYI. Okay, we're a full service financial organization. See, like, I don't know if I'm gonna, I guess that's.
See, but that's what I was thinking. Like, it says some of the slides, multiple, like, kind of repetitive. So that's how I was trying to.
Yeah, I don't know. Like this one, you could remove the notes, right? And just say your role and purpose. You already told them that it's going to be recorded on the first slide. This is your role and purpose. This is our expertise. We're providing guidance and advice during your life's journey. We're protecting your life and your assets. So client believes. So when people send these in, they don't intend on dying tomorrow, but if they do, they want to make sure their mortgage is taken care of for their family. And I'm going to have my screen up where when I'm presenting, I just need to get a better background for clients. I got to figure that out. Based on your wants, needs, and most importantly, your budget, I'm going to show you a couple different options, and you guys let me know which makes more sense to you. Does that sound fair enough?
Mm-hmm.
Okay. Before I get started, I need to confirm a few things here. So see, I'm going directly to the next paragraph. Your date of birth is this, and your wife's is this. Do either of you smoke? No. Tobacco usage at all? No. Okay, you're healthy, great. Financial qualification, that's the very next slide, which is the next part of the agent guide. So you just leave this open. Now, Mrs. Clark, I'll be asking you a few financial questions related to your mortgage so I can make the proper recommendation. And then you go through the FQF. Okay, protecting your family. So this coincides with the next paragraph. This is for the type of coverage that if anything should happen to you or your wife, the $200,000 mortgage would be paid off for your family. That is what you're looking for, right?
Mm-hmm.
Good. Now, this money doesn't get paid to any bank or lending institution. This is a tax-free sum that goes straight to your family. This way, your family can decide to pay off the home in one lump sum, pay down the principal, or just have enough money to make payments until they are able to sell the home. That's important because it gives your family every opportunity to keep the home. Wouldn't you agree?
Yep.
Okay. So now we're going to the next slide. Again, goes exactly with the next paragraph with the notes. You see what I'm talking about?
Mm-hmm.
Okay. So earlier you told me that you have, $100,000 of coverage through work. It's good that you have that coverage through work, but you can't take that coverage with you if you were to leave or lose your job, or God forbid you got sick and got laid off. That's why it's so important to have a personal plan. Wouldn't you agree?
Yes.
Okay, great. So, Tara, I'm going to have to ask you a few uncomfortable questions, but it's really important for me to ask these questions so I can make a proper recommendation. And and it's important for you to know too, so you'd understand the position that you'd be in and that your family would be in. So you told me that you don't have any personal life insurance, right?
No.
Okay, and why is that?
I don't know. I never thought about it.
Okay. Okay, and then let me ask you this, Tara, if you were to die tomorrow, what would happen to your family in regards to your mortgage?
I would have to probably get a second job, not be
I
able to
mean,
afford
you'd be
it.
dead, so.
Oh, well, that's true. Yes, I would be dead. And my
Your
kids would
family
be
would have to
somewhere
get it
else.
done.
Huh?
Your family would have to they would have to figure something out to make more money to cover your payments. Something like that.
Exactly.
Okay. Okay. And then how long would it be before they lost the home?
Give or take a couple months.
Okay, that doesn't sound very good. And then what would happen, and if you were with a husband, whatever, you ask the questions for building the need. Ryan, what would happen if Tara were to die tomorrow? And then, what would that be like for you, Ryan? And then how does it, Tara, how does it make you feel what Ryan just said? And then you get their answers. And then you say, so basically what you're telling me is that you need a plan to step in and make these payments for you if something happened. So you won't lose your home and all the equity as well. Is that right?
That's right.
All right. So Tara, let me ask you this. How would you feel if I could find your family a solution for this problem today where your home would be paid off if something happened to you? How would that feel when your head hits the pillow tonight?
Very good.
Okay, good. Well, that is what I'm here to help with. So just to tell you a little bit more about my company, we're an independent agency, meaning that we have access to over 800 insurance companies that offer these types of products. I shop through all of them. Cost is the number one thing I look for. Some of the companies we recommend are Mutual of Omaha, John Hancock, American Amicable, and American General. Right now, whatever company you have already planned to write for them, well, I don't know. I don't even think you should necessarily. I'm probably not going to say that sentence at all, because sometimes if I have to pivot to a different carrier, I don't know. I just don't like to tell them the company name right off the bat. I'll tell them once we're in the application, oh, this is through whoever. But
gotcha.
So
I'm pretty sure that's what Sean and Greg do.
What?
I think they say the company name when they deliver it.
Yeah. So all the companies we recommend have at least an A rating. You could just even say the last sentence.
Or can I just say these are just a few of the companies that we work for, but without saying names.
These are a few of the companies we work for. An example of how, their financial strength is rated. All the companies that we recommend have at least an A rating, and this ensures strength, stability, and claims paying ability. This is important to know. Wouldn't you agree?
Yes.
Okay. And then you go to the commitment, which is the very next thing. So, okay, sushi, just chill. The plan I'm going to share with you tonight is a very simple plan. And once I'm done answering all your questions, please feel free to stop and ask me questions. You will know if this plan is right for you or not. If you like the plan, then let me know you like it. And if you qualify, we can get something started. But on the other hand, if you don't like the plan, I don't want you to feel funny to say, hey, this plan is not for me. You wouldn't have a problem telling me no, would you?
No.
Okay, awesome. Some folks think that they're going to hurt my feelings, so they give me a story like they need to sleep on it or they need to think about or something silly like that. But like I said, the plan will be obvious. So just a yes or no today. Sound fair?
Sounds fair.
Okay, great. Then you go to options. And then you explain how it works. So now this is the bucket sheet page. The way your mortgage protection plan works is that both of you will be covered for $132,000. I put first option and second option. So I would say, I'm going to show you two options here. One is for a full mortgage payoff, and one is for a half mortgage payoff. And then I want you to pick the one that's going to be best for you and your budget. So if you were to get the full payoff, the full $264,000 mortgage would be paid off, but God forbid if anything happened to you in the next 20 years. It is a level death benefit and a level premium, so that means your death benefit will stay the same forever, even when your mortgage balance goes down, and your premium will never increase. It'll always stay the same. It also is immediate and tax-free, so there's no waiting period, and like I said, the distributions are tax-free. It's creditor-proof and portable, meaning it goes with you wherever you go, even if you sell your house. And if, say, you have credit card debt or anything like that, creditors cannot access this money. This is yours. It also has some living benefits. So if you get diagnosed with a chronic or terminal illness, you do have the option to pull money from the policy while you're still alive. So the premium for this plan is only $166.79. Now, if you go with the half payoff option, I factored in an additional $132,000 of accidental coverage. That way, since you're in good health, if you were to die anytime soon, more than likely it would be from an accident, and that whole mortgage would still get paid off. But, if you died from a sickness or a natural cause, it would only pay off half of the mortgage. So that's kind of how that one works there. And that just helps get the cost down a little bit for you, because I know that, $329 might be a lot, but this one would drop it down to only $166.79. So some people just really want that full mortgage paid off if something happened to them, but some people are okay with splitting it up with accidental. So it's completely up to you which option you want to go with. It has all the same features as the first plan. So then I would have them, and I did not follow the script at all, like word for word. That's just how I would probably say it. Let's see, accelerated benefits. Yeah, so I basically said all that kind of stuff. It's just I didn't do it word for word how it's in here. So let's get started. So which seems like the most suitable and affordable option that you'd like to make the application for today?
The first option.
The first option, okay. So you want to do the full payoff amount?
Full payoff.
Okay, let's do it. So just so you know, I can't get you any coverage today. We do have to do an application, and then there is an underwriting process. So we're going to see if we can get you approved and go from there.
Is there companies that you can get a quick decision that day?
Yeah, that's what I'm just thinking about. Like Quility is instant.
I was going to say, I thought, okay.
Yeah, Quility is instant. But yeah, just, they're not easy to qualify for. We do have to get the application. If you were going to do that, I would say we do have to, submit an application to see if we get you approved. Yeah, just say it like that or whatever. And then what you can expect from me. So one thing I take pride in is making the right recommendations to my clients and making sure that you're satisfied with everything we've done here today. Do either one of you have any questions for me before we wrap it up here? Okay, this is after you submit the application. So that's like your closing thing. So you just leave this up and then you pivot to the application.
Okay.
From here. And then sometimes, I don't know how people are doing it on virtual, but what I tell people when I'm in the home, I say, okay, to complete the application, I'll just need two pieces of information from you. The first one being your driver's license information, and the second one being your bank and routing information.
Gotcha.
So sometimes it's nice just to get that out of the way beforehand, so you don't get halfway through the application and you're like, oh, I don't want to give you my account number.
Exactly. When you're filling out the application, I know they have like a 30-day free look type of deal. Do they have that? If they give you their first payment there, are they like what is that fucking word? I'm trying to figure it out.
They don't give you a first payment on the appointment.
Okay.
You just you attach the payment information to the application,
Gotcha.
and all of them except Quility, you can pick a day for it to come out. But with Quility, it takes it out as soon as you complete the application. So
Gotcha. And you can do they, even when they first make that application while it's in waiting, do they have like a conditional, like you have it until you're not approved type of deal, or you literally just have to wait? Okay, so you just have to wait.
Okay. Mm-hmm. I mean, I think there is like a conditional thing. I never use it though. I just don't mess with it. I don't know. I don't really know a whole lot about that. I remember we talked about that at one point, and I just, in the kind of the beginning of my career, and I just never really did that. So yeah, I mean, I can send this to you so you can see how I have them ordered to go along with the.
Please, I would love that.